Welcome to Stock Informer for You. The noise in the market is loud, but we prefer to let the data do the talking. Forget everything you think you know about slow, sluggish government banks. State Bank of India just pulled off something historic. For the full year, India's largest public lender printed a mind-boggling net profit of 80,032 crore rupees. That is an all-time record. While everyone is chasing high-priced private banking stocks, SBI has quietly undergone an absolute transformation. Bad loans have evaporated to a two-decade low, and their digital ecosystem, YONO, is beating fintechs at their own game. But with system liquidity tightening and net interest margins under pressure across India, is the rally over, or is SBI getting ready to hit 1,300 rupees? Today, we break down SBI's core numbers, the management's master strategy, and exactly what the market expects from the upcoming Q1 results. Let's dive in. The financial powerhouse. Look at those NPA numbers. A net NPA of 0.39% means SBI's balance sheet is arguably cleaner than some of the top-tier private banks. Their credit provisioning is so thorough, with a provision coverage ratio of nearly 74%, that future toxic shocks are effectively mitigated. Loan growth accelerated by nearly 17%, heavily anchored by 21% explosive growth in the SME sector, and domestic retail home loans crossing 9.4 lakh crore rupees. The engine is firing on all cylinders. The strategy and the men behind it. But who is steering this ship? Unlike private entities with lateral corporate shifting, SBI is driven by veteran career bankers. Led by Chairman Chala Srinivasulu Setty, who took the helm in late 2024, the execution team consists of leaders who have scaled the bank over 3 decades. Setty previously headed the retail and digital verticals, masterminding the expansion of YONO, which now processes over 98% of the bank's transactions through alternative channels. Supporting him is Managing Director Ashwini Kumar Tiwari, the man who previously scaled SBI Cards into a listed powerhouse, driving corporate credit asset execution today. Their marketing strategy is a masterclass. They run a two-brand strategy. The parent SBI brand sells stability and trust under the banker to every Indian, while the standalone YONO sub-brand aggressively targets Gen Z and millennials with slick, zero-paper digital onboarding. It's a hybrid mode that private banks find incredibly expensive to replicate. Q1. Expectations and valuation. So, what happens next? With the upcoming Q1 results around the corner, what is the street expecting? Based on early volume metrics and seasonal trends, Univest Research and Street Consensus expect consolidated revenues to scale to approximately 1,29,000 crore rupees, with a projected net profit hovering around 22,200 crore. The key watch point? The 3% net interest margin floor. Because deposit costs are staying sticky, the entire banking system is facing a squeeze. If SBI defends its NIM above 3%, expect a massive institutional thumbs up. Now, look at the valuation. At a current price of around 1,040 rupees, SBI trades at a price to earnings multiple of just 11.4 times. And a price-to-book value of 1.7. When you apply a sum of the parts valuation, adding up the massive unlocked value of its listed subsidiaries like SBI Life, SBI Cards, and the upcoming IPO of SBI Mutual Fund, the core banking business is trading at a heavily discounted adjusted PE of just 9 times. The verdict: SBI is trading at a classic growth at a reasonable price valuation. It offers private sector profitability, decade-low bad loans, and absolute sovereign safety, with major global brokerages maintaining targets up to 1,275. The structural re-rating story is far from over. But what do you think? Are you buying this dip before the Q1 earnings drop, or are you holding out for more private banking options? Let me know your thoughts in the comments below. Don't forget to hit that like button, subscribe for deeper financial breakdowns, and I'll see you in the next video.